Futures markets are flashing green this morning, and the biggest gains are in technology. Nasdaq futures climbed roughly 1% in early trading, outpacing the broader S&P 500, which edged modestly higher. The gap between the two tells a clear story. Earnings season is driving this, and the companies moving the needle are concentrated in tech and high-growth sectors. Here is what is happening. Major companies have been reporting quarterly results, and so far, the numbers are holding up. Industrial manufacturers, the kind of businesses that supply equipment and materials across the economy, have been meeting or beating expectations. That matters because those companies are often treated as bellwethers. When their results come in solid, it suggests that business spending and broader demand are still on reasonably firm footing, despite all the uncertainty that has been hanging over markets. Technology and data analytics firms have also posted stronger than expected results. That carries extra weight for the Nasdaq specifically. The index is heavily concentrated in what analysts call high multiple growth stocks, companies whose share prices are built on expectations of strong future earnings. When those companies actually deliver, it reinforces the case for those valuations. When they disappoint, the drop can be sharp. Right now, the news is constructive. It is worth keeping a clear head about what futures actually mean. Pre-market moves do not lock in how the regular session closes. Once the opening bell rings and full volume and order flow come in, early gains can fade, and sometimes reverse entirely. What the positive futures tone does tell us is that institutional investors, the large funds and asset managers who move serious money, are not rushing to cut risk ahead of the open. That is a meaningful signal, even if it is not a guarantee. The broader backdrop is still complicated. Markets have spent months wrestling with questions about interest rates, the pace of inflation coming down, and global trade conditions. Earnings data, when it comes in well, can temporarily shift the focus away from those macro headwinds and back to corporate fundamentals, profits, margins, and what company executives are saying about the months ahead. That forward guidance matters as much as the raw numbers. Whether today's optimism holds through the close depends on two things. First, whether the earnings momentum continues as more companies report. Second, whether any fresh economic data released during the session changes the macro picture. The practical takeaway here: in a market this sensitive to earnings surprises, the direction of a single session can turn quickly on guidance and macro data. Watching what executives say about the outlook, not just the headline numbers, gives a clearer read on where sentiment may move next. This briefing is brought to you by First Financial News, clear daily coverage of the economy and markets at firstfinancialnews.com.